If I offered you two choices, $50 guaranteed today, or a 50-50 chance to win $100, which choice would you make? That is risk versus reward. It's a trade off we make all the time, not just with money, but with life decisions from your career to parenting choices. Let's talk about what that really means in investing and how you can take smart risks without losing peace of mind. Welcome to today's Coffee and Learn session. I am Victoria, investor, soldier, wife, and mom. And I am documenting our family's journey to a $1 million portfolio, 5 Bitcoins, and 50 ETH. Each week, we take one concept from the financial world and make it super simple, enough to apply it in our real everyday life. So today, let's get real about risk and reward. Two words that they sound totally intimidating, but once you understand them, everything becomes like much more clearer. Risk is simply uncertainty. It's the chance that things might not go exactly as you planned. And in investing, it is the price we pay for the possibility of seeing growth. The honest truth is, there's no such thing as zero risk, right? Even keeping all your cash in a savings account carries inflation risk. Over time, prices rise, just like we've seen this year, and the value of your money quietly shrinks. So while your cash feels safe, it can actually lose buying power, like slowly, like a balloon leaking air. Now, on the other side of the equation is what we call reward. That's what we get for taking the leap, for letting our money participate in the growth of businesses and in the economy in general. Without risk, there's no reward. But without understanding risk, reward, that can, like, the reward can just disappear very fast. Think of it this way: when you drive, there's risk every time you leave the house, right? But you manage it. You wear your seatbelt, you follow the rules, you stay alert. You don't, you don't like say, I'm not going to drive altogether just because you want to take precautions. Investing works the same way. You don't avoid it, you manage it. Here's a simple example. Let's say your cousin wants to start a food truck. You give her $1,000. There's risk. Maybe she struggles to find customers, or maybe she just spends your money. But there's also reward. If it becomes the neighborhood like favorite like place, your $1,000 could double. That's the trade-off. You can't have one without having the other. Now, in the stock market, not all risks are equal. Big new companies like a startup, they can rise fast and fall fast. Like during the pandemic, right? A lot of companies came about. But more established companies like Coca-Cola, Procter and Gamble, they're bigger, they're steadier, they're low risk, but the reward is moderate. That's why seasoned investors, they blend both. Is you call it balance, right? Financial life mixes both comfort and curiosity. There are also different types of risks to be aware of, right? There is market risk, where prices go up and down every single day based on news or emotions. There is inflation risk, which we talked about earlier. That and there is emotional risk, the biggest one of all, where fear or impatience makes us sell too soon. One of my favorite quotes from Peter Lynch says, "The key to making money in stocks is not to get scared out of them." That's why mindset actually matters a lot. It's not about avoiding risk, but also choosing the right amount for your goals and your personality. If watching your account drops 10% gives you like sleepless nights, you're likely taking too much risk. But if you can ride out those waves calmly, knowing that you're investing for 10 or 20 years, then you're managing risk well. Warren Buffett once said, the stock market is designed to transfer money from the active to the patient. So you get to choose, what do you want to be? Do you want to be the patient? It's the patient investor, not the loudest, not the fastest, that wins. The patient wins. I'll give you one more everyday example to, make this simpler. Think about planting a garden. When you drop those seeds into the soil, you don't know exactly how they will grow, right? Some may sprout beautifully, others might not even make it a whole. That is risk. But you still plant because you trust the process, the sun, the soil, you watering it, and the time it takes. And that's reward. The harvest comes only when you give it space to grow. So remember, risk isn't the enemy, it's simply the path we walk to reach reward. And the secret is balance. Enough risk to grow, but not too much that you lose peace along the way. If you're starting to have like sleepless night, then that means you've taken too much risk. If this session helped you see risk a little differently, make sure to subscribe and join me in the next Coffee and Learn, where we'll bring everything together and talk about what a portfolio really is and how to build one that feels right for your family. See you next time. Thank you.